Bitcoin has been flying high recently, and the token has recently been flirting with the $100,000 level after setting new all-time highs. Those are heady gains to be sure, but traders actually have ways to play Bitcoin that can earn them even higher profits than Bitcoin directly. These methods present greater risk, but they do offer much higher potential returns in exchange. Here's how to generate higher returns. Playing Bitcoin than actually buying Bitcoin. 5 ways to potentially earn higher returns on Bitcoin. Bitcoin has a long history of volatile returns, but the price gains over time have been level. It's been up and to the right, despite some massive declines. From time to time, while traders can still purchase Bitcoin from a crypto exchange, it's now possible to wager on Bitcoin's rise and potentially generate even higher volatile returns in a variety of other ways. The first option on Bitcoin ETF saw the arrival of Bitcoin exchange trade funds, allowing traders to own Bitcoin fund rather than directly crypto exchange. The fund as the cryptos perform to one. So if Bitcoin rises 10%, so does the fund, with the best online brokers charging no commissions on ETFs trades and the low expense ratios of the Bitcoin ETFs. The funds are a great way to own and trade the cryptocurrency. Now have the ability to trade options on those Bitcoin ETFs. As options began rolling out on the funds in November 2024, options give traders a more leveraged way to ride Bitcoin's price, increasing, offering potentially faster gains than owning it directly if the coin prices rises. Traders can also sell options for income and generate returns from the coin's notorious volatility. Drawbacks. Options offer leverage, but the potential for magnified gains also comes with the risk of magnified losses. You're adding leverage on top of an already volatile cryptocurrency. Bitcoin futures. That's the second option. While futures may be more associated with commodities such as oil, corn, and pork bellies, they also allow traders to purchase Bitcoin and Ethereum, the world's second largest cryptocurrency. Bitcoin futures also give traders leverage on the price of Bitcoin, allowing them to put up only a portion of the full purchase price as margin and accelerate the returns if the token rises. With futures, you'll pay a small fraction of the contract's full value to open the position. If Bitcoin rises, your position also rises, but it will move up even faster because you've invested only part of the contract's value. But this leverage cuts both ways and can accelerate losses too. The drawbacks are leverage cuts both ways, and if Bitcoin starts to fall, you'll need to put up cash to hold the futures positions or otherwise close it again. It's leverage on top of Bitcoin's volatility. Third one, buy MicroStrategy. MicroStrategy is a publicly traded company that has purchased substantial amounts of Bitcoin since 2020, and it offers a way to play the rise of Bitcoin. As of late November, the company has held 386,700 Bitcoins, paying an average price of 56,000 per coin. Recently, it has been borrowing money to purchase the coin. MicroStrategy stock went on a massive run in 2024, and at one point was up more than 700% for the year. Traders are using the stock as a Bitcoin proxy. Even though it's worth more than the sum of its Bitcoin stash, the momentum could continue if the company keep borrowing money to purchase tokens, and the price of Bitcoin keeps moving even higher. The drawbacks are that traders are paying more for MicroStrategy stock than the underlying coins are worth. So traders need a spiral in which the company can keep issuing more convertible debt to buy more Bitcoins. MicroStrategy is also leveraged on top of Bitcoin's volatility. 4. Trade options on MicroStrategy. If MicroStrategy's volatility and returns aren't enough, you can also trade options on the stock. You can use advanced strategies such as synthetic long to avoid putting up any money, and then your returns will approximate Bitcoin's return. Though you hadn't invested any capital, offering the potential for literally infinite returns, or you could choose to profit on the stock's volatility by selling calls or puts, generating income in the process. The best brokers for options trading can offer favorable prices and help you evaluate your trades. Drawbacks. Options on MicroStrategy can even move faster than the stocks does. Leverage onto top of leverage on top of Bitcoin's volatility. Options can quickly become worthless. 5. Buy a leveraged MicroStrategy fund. If all that action isn't enough, you can buy funds that attempt to provide 2 or 3 times the daily gain on MicroStrategy. For example, a Defiance Daily Target X Long MSTR ETF uses derivatives to try to offer 2 times the daily performance of MicroStrategy. If MicroStrategy rises 10% a day, the fund should rise 20%. But these funds can have a huge tracking error. They don't perfectly track their target because of the way they're structured. Even if that isn't enough, you can trade options on some of these leverage funds, giving you leverage on leverage. Drawbacks. A leverage fund adds even more leverage to an investment that it's itself leveraged and betting on highly volatile Bitcoin. It's leveraged all the way down. Should you try Bitcoin or these alternatives? These leverage trades pile leverage on top of leverage, adding incalculable levels of risk to what is already a highly risky trade in Bitcoin itself. If the trade works, if Bitcoin rises, the trade could work phenomenally, like a whip that accelerates into a ear splitting crack. Those levels of risk could accelerate into massive returns, quickly or totally wipe out an investment in days or even hours. So these leverage trades aren't for the faint-hearted or those who need their money. It's also important that Bitcoin itself is highly risky despite its eye-popping returns. Bitcoin is not backed by the assets or cash flow of an underlying entity, as a stock is. That means its returns are determined entirely by what the next trader will pay for it, exhibiting what experts call the greater fool theory of investing. While Bitcoin is less risky than other trades on this list, that doesn't mean it's safe. You use money you can afford to lose. If you're participating in highly leveraged trades such as these, it's important to understand their lottery tickets. You might win sometimes, but your chances of striking it big are low. Bottom line is, Bitcoin is highly volatile and risky, but the trades above can magnify its aggressive moves at the risk of losing it all if the cryptocurrency heads down. Anyone trading these products needs to be comfortable with losing it all and potentially even more than that if they're using options. Anyways, thank you for joining. Again, smash the like button, subscribe to the channel, comment down below what you think, and until next time.